A brief history on Forex trading. Alright, let's take a journey through the history of Forex trading, with a touch of humor to keep things interesting. It all started back in ancient times when people would trade goods and services with each other. You know, like trading a goat for some wheat or something. But as civilizations grew and expanded, people started using different forms of currency to make trades easier. Fast forward a few thousand years to the 19th century, when currencies started to be traded on a more formal basis. But it wasn't until the 1970s that modern Forex trading really took off, thanks in large part to the invention of floating exchange rates. Now, Forex trading is a massive industry, with trillions of dollars changing hands every day. And just like any other industry, it has its fair share of characters. There are the big players, like banks and hedge funds, who have the resources and expertise to move markets with just a few trades. And then there are the individual traders, who are often just trying to make a quick buck, or euro, or yen, or whatever. But no matter who you are, if you want to succeed in Forex trading, you need to have a plan and stick to it. That means managing your risk, being disciplined with your trades, and never letting your emotions get the best of you. It also means being prepared for the unexpected, like sudden market swings or unexpected news events. Of course, it's not all serious business in the world of Forex trading. There are plenty of jokes and memes floating around, like the classic "buy the dip" advice or the ongoing debate over whether technical analysis or fundamental analysis is better. And let's not forget the internet trolls, who love to talk trash about different currencies and trading strategies just for the fun of it. But hey, what's a little friendly banter between traders, right? In the end, Forex trading is a complex and ever-changing industry, full of highs and lows, wins and losses. But if you can approach it with a sense of humor and a willingness to learn, there's no telling what you might be able to achieve. So, grab your currency pairs and get ready to ride the wave. It's a wild and wacky world out there in Forex trading land. One interesting thing to note is that Forex trading used to be reserved for the wealthy elite, as the high costs of trading and the need for specialized knowledge made it inaccessible to the average person. But with the rise of online trading platforms and low-cost brokers, Forex trading has become much more accessible to people from all walks of life. Another important milestone in the history of Forex trading was the invention of the internet, which opened up new opportunities for traders to connect and share information. Online forums and social media groups have become hubs of discussion for traders all over the world, where they can share tips, strategies, and even jokes with each other. Of course, with the rise of the internet also came new risks and challenges for Forex traders. Cybersecurity threats, fake news, and market manipulation are just a few of the issues that traders need to be aware of in today's digital age. But despite these challenges, Forex trading remains a popular and potentially lucrative pursuit for many people. It's a market that never sleeps, with trading happening around the clock in different time zones all over the world. And with the right strategy and a bit of luck, anyone can potentially make a profit. But as with any form of trading or investing, there are no guarantees. It's important to do your research, manage your risk, and never invest more than you can afford to lose. And let's not forget the importance of having a sense of humor about it all. Sometimes things don't go according to plan, and you just have to laugh it off and move on to the next trade. After all, as the saying goes, you win some, you lose some, and some get stopped out for a small loss before reversing and hitting your original target for a massive profit. Or something like that. Believe it or not, people have been trading currencies for centuries, even before the concept of modern banking existed. Back in the day, traders would exchange different currencies in order to facilitate international trade. This was done primarily through physical exchanges, such as markets or money changers. For example, if someone from Europe wanted to buy spices from the Middle East, they would need to exchange their local currency for the currency of the region where the spices were grown. Over time, these physical exchanges began to evolve into more formalized institutions, such as banks and financial centers. The first currency exchange market is believed to have been established in Amsterdam in the 17th century, where traders would gather to exchange different currencies and commodities. Of course, without the aid of computers, trading was a much more labor-intensive process back then. Traders would rely on telegraphs and other forms of communication to stay up to date on market news and make informed trading decisions. It wasn't until the mid-20th century that technology began to revolutionize the world of Forex trading. With the advent of computers and electronic trading systems, trading became much faster and more efficient. Instead of relying on human brokers to execute trades, traders could now use computers to execute trades automatically based on pre-programmed algorithms. But even with all the advancements in technology, the basic principles of Forex trading remain the same. It's all about buying and selling currencies in order to make a profit based on fluctuations in exchange rates. And while the tools and techniques used by traders have certainly evolved over time, the basic human emotions and instincts that drive the markets have remained the same. So there you have it, a brief history of Forex trading from ancient times to the present day. It's a fascinating world that has been shaped by human ingenuity, innovation, and, of course, a healthy dose of greed and speculation. But as with any form of investing, it's important to approach it with caution and a sense of humor, and never invest more than you can afford to lose.